So please welcome from the Cobalt Institute, the Head of Government Affairs, to take you through this, Mike Blakeney.
Thank you very much. And so thank you everybody for taking the time to be here. I always know this is sort of one of the toughest sessions of the Cobalt Congress because, of course, we've had a long couple of days. Everyone had a great night last night. And I always think this is the one where if you're here, it's because you're obviously very interested in the subject matter. So thank you so much for taking the time. And by the way, just as the famous philosopher Jean-Claude Van Damme once said, 1 in every 5 people is a lunatic. So we've got fewer people here today. That means we're safe, okay? That means we're safe. So I want to just take the time to thank you all for coming and to invite my fellow panelists up. Just before I wanted to start, I just wanted to add to what Sasha said, which is really the reason we wanted to organize this session today is because we hear a lot from governments around the world saying, you know, we want to talk about critical minerals and critical raw materials and, you know, we're concerned about the geopolitics and this, that, and the other. But one of the things that I hear precious little about is, well, how do you fund these projects? Because actually many people in the Cobalt Institute membership who I speak to, and many of the people in this room, will say, you know, we've gone out and we've been entrepreneurial and we've been innovative and we're trying to build projects. But it's hard. It's hard to do that. And a lot of time is spent trying to get finance through the door and keep that flywheel going in order to get through the valley of death and into a productive project. So we really wanted to explore that today and get beneath the skin of, okay, if governments want to do A, what can be done to help finance communities in B to deliver? So I'd like to welcome up my panelists today. So first of all, I've got Navaid, who is the CEO of EVelution Energy. Thank you very much, Navaid. We've got Mitch Smith, who is from partner at Moneta Securities. Feel free to grab one. Good to see you. We've got Angela B. From Mercuria. Thank you so much, Angela. And we've got, last but not least, Dr. Andrew Tong, who is the incoming CEO of Cobalt Blue. Thank you so much. Thank you. So, yes, feel free. I think we've slightly confused you because, of course, I think we're in reverse order according to the panel. We've done that just because clearly this time in the morning we need to keep everyone awake, so we're going to keep you thinking and guessing.
We can switch.
No, it's okay. Don't worry. Don't worry. So first of all, I guess in my introductory comments, I sort of posed a very provocative question. And I guess at the start, I want to see, am I right? So the first question to the panel, and I'm going to start with you, Navaid, because you're to my left. Is there a gap between policy ambitions of various governments and what is possible within the private finance sector? And maybe just give a quick introduction to yourself and EVelution when you do it.
Sure, Mike. Yes, I would say there's a huge gap. You know, we are EVelution Energy, and we are building the first solar-powered cobalt processing facility in the United States in Arizona. We are going to be making cobalt metal for the aerospace and defense industry and cobalt sulfate for EV batteries. But yes, in answer to your question, there is currently a very large gap between policy, what the politicians want to do, and you know, it's a bipartisan issue in the United States. Both Republicans and Democrats want to rebuild the critical minerals processing industry in the United States. And the private sector really does not have the knowledge at the moment. The private equity funds, many of the banks, they are really looking at this industry without understanding what it's really going to take, and so they're actually sitting on their hands. And you know, they've raised a lot of money under this green transition and electrification thesis, but they're actually not investing any of the money. So it's quite a big issue.
And so I'm really pleased because we've got two panelists who are sort of on the other side, on the finance side. So maybe I can take that challenge and pose it to, first of all, Mitch and then Angela, and say, okay, so the question is, the finance isn't there. Is it not, and why not?
Yeah, no, I think there's a massive disconnect, and you know, like Navaid is saying, there's been a tremendous amount of capital that has been raised, but it's the deployment into the sector that's really missing. I think a lot of it is because it's a niche market. I think the other part is that the capital that needs to go to these sources, there's a timing gap as well, right? And so if you don't have an understanding of when you're going to get those return on capital, it makes it very difficult for lending partners to put that at risk.
I often hear this as people say the challenge is, for a lot of people in the finance community, this is, for a whole host of reasons, not something they're used to doing and investing in. And I'm interested to know, so for those who don't know, and I'm going to slightly, I think Angela might introduce herself, and I might be jumping across her by doing this, but people might be familiar with TechMet, which is a sort of big critical mineral investor, and Mercuria is one of the brains and the investors behind that. And so I'm interested to know, so we hear often it's really challenging to invest in this, and it's outside of the wheelhouse of many of the investors. Why did Mercuria go down this route, and what have you learned?
Thank you, Mike. Yes, indeed, Mercuria has been very active in the critical mineral sector. I think one reason for that is we really have the long-term commitment to this sector. We generally believe in the great area of accelerating electrification of the human history for the long term. So one, we have a really strong belief for the long term, then you can actually put the investment into that. And also, because we're not just have the investment arm, we're also building a global franchise in the real business. Like we have built a global team with over 80 people now, actually actively trading physical markets for key critical mineral like copper, cobalt, nickel. So we actually combine this expertise in the physical market with the project. So work with each other very closely. So that's probably the unique advantage for Mercuria as a house. That's why we're still very passionate about this sector. We are still very actively looking for projects and reviewing this project.
Thank you. And then finally, I'm going to go to Dr. Andrew Tong, who is the CEO, the incoming CEO of Cobalt Blue, which I think traditionally you've been a sort of looking at mining cobalt in Australia, but I believe you're kind of increasingly interested in sort of expanding that work. So maybe you can tell me from a sort of producer perspective, we've just heard from two people in the finance community who've said it's difficult. What's your experience been at Cobalt Blue?
Well, thanks, Mike. Thanks for having me on the panel today. I was lining up my funds with Mitch last night at dinner, so he's ready with a check, and I've just met Angela, so I'll hit her up afterwards. You're right. Cobalt Blue historically was looking at a big mining project, cobalt project in Australia. But what we realised is that with the low cobalt price and hundreds of millions of dollars of investment, there's just a big mismatch. And what we recognised is that the world doesn't need new mines of cobalt, because there's lots of cobalt. What it needs is a midstream. But that presents new challenges for finance. I think, as Angela just said, there's a lot of conviction money out there wanting to be in this space, but there's a gap because the funds, the mechanism to deploy that doesn't necessarily have the technical skills for independent technical evaluation, ITE reports. It's very hard to find experts to do that on the midstream refining stories when there haven't been many of those built outside of China. So if you're a fund and you say, I want to invest money into this, who do you ring to do the ITE report? Who do you go to for the volatile cobalt market, nickel market, lithium market, and give you a long-term forecast that you can bank into your models? It's a very difficult sector to do that because we've really only been trying to do this for 5 to 10 years. So there isn't this long history of the copper market investment in that. So this is a different space. And I think it's going to take another 5 to 10 years for that expertise to kind of come through and be available, and then you'll get investment happening. But we're just in this early stage at the moment.
So is that the role for government?
You're asking me? Yes, definitely. I think governments need to go in and support or lead or crowd in. That's often the phrase that we engage governments with, is please come on board with all these projects. Be the first mover, crowd in all that private finance, and there's many ways to do that. I think governments across the world are really struggling to come up with the right mechanisms to crowd in. They don't want to necessarily be exposed to equity in a project. That's very hard from a governance perspective. If you have government money, do they join your board? Do they join how do they manage that? So I think they're much more comfortable with loans, but then loans come with repayment and debt covenants and so on. So they want to do it. There's a lot of desire to do it. I think people are not sure the model or the mechanism.
Are tariffs the answer?
I can take that. I think they do help, for sure. They don't need to be significant. They need to be at a certain level that, as mentioned earlier, it's bipartisan. The Republicans in the first Trump administration and then the Democrats in the Biden administration had 25% tariffs on cobalt sulfate coming into the United States, and that seems to be a fair level. I mean, obviously 145% is a little outlandish, but tariffs are definitely helpful. There's a lot of tax credits also that are quite helpful, like the production tax credit under the Inflation Reduction Act. That is a very helpful policy for investors and startups like us to show bigger institutional investors that there's sort of a baseline margin that is protected with a tax credit of, say, 10%, which is what the production tax credit is. And then I can also talk about the Exim Bank programs that are very helpful in terms of low-cost loans for construction finance, so that's helpful. But there's a gap, like the initial startup phase requires more equity, and pre-construction phase is sort of where the most help is required, and there are certain government programs under the Department of Defense related to certain grant money, which is always helpful, and it doesn't have to be a lot. Couple million, 3, 4, 5 million, just to get started so that startups can reach milestones and attract other funding or other sources of capital.
Thank you. So I guess what I'm taking from those last two comments is there's a role for governments. It's got to be the right role. It's about bringing in private finance. It's not about heavy subsidies. There's a role potentially for tariffs, although I know that there are a variety of different views on that within the industry. So I guess my question to both Mitch and Angela then is, you guys are on the other side of this fence. Does that sound right to you, or is there anything else that you would add? Maybe I'll start with Angela.
Sure. From a very top-down level, we think definitely government plays a role. What matters more is this policy stability, the policy coherence. Mm-hmm. You can change a policy, that's fine, but you should have a very clear logic to deliver to the market that the market is expecting it as a stable policy regime in the sector that can reduce the jurisdiction risk for the project, because the money is not going to stay there for 1 day, 2 days, right? The policy could change 1 month tariff, right? Yep. 2 months, but money probably looking for a longer time horizon, like 10 years, 10 years, or even beyond. So that's, I think, is we care more when we're looking into the investment profile for the region. That's one. I think that's very key. If we look at the project, even for copper, normally cobalt is produced as a byproduct copper project in the Latin American, right? Then also another role I think is also worth mentioning is when the government really want to do something from scratch, they actually can play a very key role to encourage the competition, a healthy competition in the region. It's normally just for capital or even for the underlying asset like commodities, right? When the competition becomes more healthier and market gets more competitive, naturally you're going to be more regularized by the market, and then that's going to lift the investment profile to the market. So that's how I understand as a analyst perspective. Yeah.
Yeah, I'll touch on that a little bit too, and I think you made a good point, Angela, about with government support, you need to have that stability, right? And there's just so much volatility right now with changing policies, and one day there's a 10% tariff, one day there's a 100% tariff. It's that unknown that I think also creates a bit of risk for the private sector as well, and not having that stability is something that is damaging to the industry. Obviously mining and is a long-term investment. It's a long-term process. It doesn't happen overnight. So we need to have that a little bit of stability to ensure for capital to flow into the space.
And I mean, I guess we've just heard from Shirley at SMM, who was talking about the DRC and the export ban. I mean, I guess, is that a sort of example again of this? I mean, we've talked about the tariffs and Trump and that uncertainty, but is that another level of uncertainty?
Yeah, for sure. Again, it's having these export bans, having these tariffs, looking for kind of a deglobalization as well, right? Countries are trying to secure their own supply chains internally versus a couple of years ago it was more about friend sharing, about expanding those borders, and now it's kind of that tightening of that structure. So it's an interesting time for sure.
So I guess, I mean, I'm almost tempted to ask a really philosophical question that's actually maybe slightly beyond the scope of this panel, and maybe Navaid, I'll bring you in on this as the sort of the American on the panel, which is Mitch has made a really interesting point just now, which is in 10 years' time, the world could look very different to what it did 10 years ago, and it might be more insular, it might be more closed, it might be a bit more protectionist. Is that the way we're going, and what does that mean for people trying to build these projects and invest in these projects?
I do believe that it is the way we are going, and it's probably more related to providing good jobs for people in those countries that are putting up tariff walls and trying to restart domestic reindustrialization that may have gone away over the last 30 years to other countries, to lower cost jurisdictions perhaps. So it's more of a matter of domestic employment, right? So when you have your labor force is getting trained in new technologies and they're working in critical minerals, I think getting paid a living wage, that's very helpful for obviously the politicians to get voted in again. And and of course, there's a lot of moving parts, right, to critical minerals processing and reindustrialization. You need not just processors that take hydroxide and turn it into sulfate. You need the PCAM producers to be up and running also within North America. What it's very hard to do is to have a processor of sulfate in the United States, but then that processor has to send that material back to Korea or Japan or another country to then turn that into PCAM and CAM and then send that material back to a gigafactory or a battery cell manufacturer in the United States. Nobody really likes that idea, but that's currently perhaps the world we live in today. And there's certain PCAM factories, CAM factories that are supposed to be coming online in North America in the next year or two, but with the uncertainty around tariffs and new rules under new administrations, certain projects are on hold because the people can't make a long-term decision on how to invest that capital.
Interesting. And so I guess from a financial community perspective, We've just heard about the international nature of the market and again the uncertainty that exists. Do you guys feel that? And I guess what would your call to action be for the various governments involved to say, well, okay, there will be an international trade dimension to this, certainly in the medium term, outside of China, I should say. And what should a government response to that be, and how do you find that? Maybe I'll start with Mitch, because I can see you nodding.
Yeah, no, again, government needs to be a large proponent to ensuring that infrastructure is built. We spoke about it the other evening, and about it's not just about extraction; it's also about processing, and you need to have these processing infrastructure in place to attract that in. The other part is looking at different tax regimes, et cetera, jurisdictions, looking at where you put these factories and how you encourage companies to build domestically. Navaid made a really good point about it's about creating jobs, and it's about creating employment. It's about creating economy within the country, and so you need to look at these. You need to look at that infrastructure with detail.
And obviously, Canada's got a really rich mining heritage from Saskatchewan to, you've got Ballet in Ontario. And one thing I often hear, actually, when I was in Ottawa last year was, how can Canada do more of that value addition side of thing?
Yeah.
I'd be interested to know your views on that.
Yeah, again, Canada obviously has a very rich, long history of mining, of extracting, anything from potash to cobalt to copper, nickel, gold, of course. But we've always looked at other countries to then refine a lot of that product, and it's an issue, and I think they are trying to attract in groups to produce or to do the processing, the refining, right up to the end use manufacturing. So it's starting, but again, it's slow, and I think that some of the unknowns within the space have created a bit of a hurdle to investment into that side of the sector, but it's coming.
Thank you. Okay, and so I'm conscious, Andrew, we've not come to you for a little bit, but I guess you're probably in this space too. And I mean, I've just asked Mitch about this link between, countries that are historically good at mining but haven't done so much in the midstream. And I know Australia is also really closely looking at this. Have you found, and I know the Australian government has support facilities in place for companies, but have you found that challenging? Looking at going from being a mining producer to a midstream producer, does that introduce new complexity? We talked about skills as well. Does that add a level of challenge?
Definitely. I think to the audience, if you're familiar with the Australian marketing push, we've got everything in the ground. So come and do business with Australia. The problem, though, is that there's a massive disconnect between dirt in the ground and the cost to get that out and then get that to market. And as my colleagues up here said, we always say in the battery supply chain, there's 10 steps from the mine to the first processing, refining. You've then got chemicals, then becomes a manufactured good from the PCAM onwards. There's basically 10 steps to a car battery. And that presents challenges, because where do the countries play? Countries could do all 10 steps, or they could do steps 1 to 3 or 4 and 5 and so on. And I think Australia, like Canada, like other countries, is well endowed with dirt, but it's the challenge is that actually what we need in the marketplace? Mm-hmm. I think some of the other comments before, if I can go back to the mic, I think what we need is governments to provide leadership, and that comes and goes, because governments in many countries win elections, lose elections, so you get that change in leadership. But there needs to be longer term thinking. But as Navaid said, it's very difficult for governments because they want to look after their people. They need to provide jobs for their people. They need to provide income for their people. And my personal view is it's great to see the DRC government be interventionist because they're looking after their country. The methods, everybody have different opinions, but it's great to see a government trying to do something, and let's all wait and see where that goes. Because what we're realising is that the markets aren't free, they're not open, and that's a pushback against the last 50 years. It doesn't mean that I don't believe in globalisation, but that's where we sit at the moment in the span of all these markets. So I think going forward we're going to have more interventionist government. Hopefully it's strong leadership, but good leadership, and that's where there's risk. And then financial communities will go with that, but they need to see that planning and vision, and it's very hard to get all of that aligned.
It's really interesting, and I think one thing I often hear is, how do I put this? Not all governments, but with a variety of governments, you often get this duality, which is on the one hand, they say, we really want more critical minerals, we really want more mining, we really want more processing, you know, we're really supportive of this. But then on the other hand, they introduce policies that are counter to that. I mean, I'm thinking particularly in the EU of, you know, proposals for an occupational exposure limit, and they're proposing values that are really low, like 1 microgram of cobalt per meter cubed, which is just, you know, unachievable. And, you know, one of our kind of pushbacks as an association has been, well, you can't have, you know, policies on the one hand saying we need to meet these targets in 2030 and then put in place other policies that run counter to it. And I'm interested to know, is this something that, I'm saying of Navaid and Andrew here, you know, is this something that you find as a challenge? Can governments be more joined up in saying, well, if we do need to get finance into this sector, then actually we really need to focus on what are the policy mechanisms and the right policy structure to make that happen? Maybe, Navaid, I'll come to you first. We've just had Andrew, and I know, you know, the EPA has changed a lot in the last few months, but been very active in this space. Do you find these challenges? Is permitting a challenge?
Well, for us, permitting is quite local, right? In the United States, permitting has, and probably always will be, a local phenomenon at the state and county level, and, you know, less so from the federal level, even though the feds are now pushing for easier permitting and doing away with certain EPA requirements that you need to have studies done and could take a year. Some of these rules are going away, which on the one hand is good, but then on the other hand, this new administration wants to phase out EV tax credits, and so OEMs are not sure, you know, how much demand there's going to be for EVs going forward. So, you know, it's like a real push-pull. Some things are good, like doing away with lots of regulations, but then on the other side, you know, they're lowering demand, therefore lowering the incentive of private companies to step in to meet that demand, lowering the incentives for OEMs to sign offtake agreements that help companies build out processing to meet like a stable demand or a growing demand. So if that policy, as someone mentioned earlier, can be more stable, that would obviously be very helpful. You know, but there are certain programs. One program we're taking advantage of is EB-5, Immigrant Investor Program, that's been around for 20 years. It's a again, it doesn't cost the U.S. government anything. It's a program for foreign investors to come into the United States and get a green card for themselves and their family and their children on an expedited manner with an investment of $800,000 in companies that are qualified and building projects in rural and economically underserved areas like ours. So there are all these sort of programs that incentivize other people to invest money and not just the US government handing out checks, which we have been trying to take advantage of and are taking advantage of. But yeah, it's not easy to navigate. It takes a lot of lobbying, that's costly. It takes a lot of other like manpower and resources to really navigate this morass of different government regulation and policy, and so yes, that's a big capital cost as well. So,
and I often hear people say, we talk about OPEX and CAPEX, right? And so CAPEX is a big thing that people focus on because that's a really hard thing, and you get the valley of death with these companies. But often the cost of finance becomes an OPEX cost as well. And you've talked about the skills and the talents and things like that and bringing people in. So I guess what I'm maybe reading into this, and I'm sort of looking at Mitch and Angela now, is from everything I've heard, it all seems to come back to a risk, right? And investing in a new market where you don't have the skills is a risk. Getting over the valley of death is a risk. Getting all the different financing tools in place is a risk. Market volatility is a risk. The international geopolitical space is a risk. Ooh.
Yeah, there's a lot of risks. It goes on
I
and
think
on.
it's time for lunch. Let's go to lunch.
Don't want to put too much of a downer on it. It's supposed to be a good news story, but I'm interested to see your take on that. Like, how do you deal with that?
Well, and it's that sustaining cost too, right? Of maintaining these projects over time, and again, it's not an immediate capital injection into these things with return on capital right away. It takes many years for that return to happen, and I think that's been one of the biggest risks for capital flow into this space. Is it's still a relatively new industry, right? The battery space is something that's relatively new. That these metals that are going into it, it's new. It's small as well, right? So I think that it's a factor of time where people are looking at these and want to see where they can put it. I do think though that there's been a reallocation of capital, and it is starting to flow into the space, and we're seeing it. Seeing it daily with news flow of companies getting financed and groups doing M&A activity and spurring interest within the sector. So it's I think a very favorable. With all those risks that you mentioned, there's still some light at the end of the tunnel, so to speak.
And I guess the finance community's nothing if not great at managing risk and working around risk. So I guess Angela, I'm thinking in particular of the US government and the EU, although obviously it's wider than that. But the US government and the EU are both setting themselves targets. In the EU's case, named targets in 2030 for growing out its industry. In the US, not so prescriptive, but clearly also setting themselves a target to grow that. Are they going to achieve their targets? Are they going to achieve them as fast as they think? Or, we've just heard from Mitch about the risk, is there something they can do to help de-risk projects or de-risk finance to get more money? And from Mercuria, from TechMet, from a sort of finance community perspective, do you think things are going to move fast enough, or do you think things could go faster with some help?
Definitely, things need to get faster to make sure that's going to achieve the target. I think that really the key challenge is because honestly, before this year, I feel like everyone has been envisioning the goal. You make some progress, in the decarbonization by EU, but then set back by some economic downturn. But until this year, the new U.S. administration served as a wake-up call. You guys need really move up to trying to to put onto the road for your goal. But to do that, the most important is to secure a supply chain, especially the critical mineral chain. That's why this year, the world has been waking up, realized, okay, now we already entered the period of geopolitical competition for critical minerals. So definitely things should be moved up, especially for EU, because US has been taking action already. It's hard to comment whether it's right action or not. It's actually, they also adjusting policy themselves, but EU needs also to do something. Otherwise, you're probably going to lag behind in competing for the critical minerals, especially cobalt and nickel. They're actually moving some part for copper, but not, I think for other like minor mineral, critical minerals, they need to do more.
Okay. And I'm really interested because the EU example is a really interesting one because I guess you'll be aware, and for the audience, they passed the Critical Raw Materials Act a couple of years ago now, I think. And the one big observation we had, there was a lot of stuff in there about trying to speed up permitting. There was a lot of stuff in there about trying to help joint purchasing of minerals, and we've got some questions about whether that's the right approach or not. But the one thing that was really missing in that was money.
Yeah.
And this was always the thing that jumped out of us is, you know, at the end of the day, it's sort of skirting around the real issue because we hear people crying out saying, well, you know, the projects will only happen if you can get the financing in place for them to happen. Do they need to think about that? Is that?
Yeah, that's a good point. That's a really good point. Yes, you need to turn policy into economic return for project. It's not just like calling for project. But if you're actually investing in, like, say, the processing capacity in EU, cost is the major like factor, the high energy cost, how to deal with that, right? And also in addition to the cost, we're talking to some industry companies in the region. Why do you guys expanding capacity or investing into, like, say, processing capacity? No, it's hard to find the skilled labor. It's hard to find an engineer. We need a complete supply chain for that. It's not. Sometimes it's the money, but sometimes it's more than just the money. So things need to change. The government needs to come up with a framework to think, right? As an initial step, you probably need to take a stronger leadership to do that. And then once you reach the economy of scale, then things are going to happen naturally. It's the case in China. Look how China actually using this industry policy to really build the NEV industry from scratch. So they have a really good industry policy. They subsidize education. They subsidize every bit of the supply chain from scratch until the industry reach into the economy of scale. You see the subsidies pull back, and actually when they achieve the economy of scale, they have nurtured a really healthy circle of technology improvement, right? Then you're actually seeing NEV, it's no longer need any like subsidy to really compete with the ICE. So that's really a very good example. That's we think others should learn from China. Yeah.
Mitch, I can see you nodding along.
Yeah, no, I agree. I think there's a lot of takeaways and that's one of the bigger things that's been missed by some of the Western countries is they haven't put money into the education or into the retooling of professionals in the industry. We've seen it kind of slow away, and mining has kind of had that negative look, anyways. Right? People look at mining and they don't recognize the necessity for it, and so if you don't invest in that early, it doesn't complete that cycle, like you're saying, right? So we need to really have look at that as part of policy. It's not just about financing it, but it's about looking at those initiatives to be able to encourage it.
I'm really interested because I think this is one of the themes actually that I think has been emerging from this Congress is, for me anyway, the interface between reputation and finance. And what I mean by that is, if companies want to invest in mining, sometimes one of the barriers I often hear from people is people saying, well, people associate mining with being dirty and heavy industry generally as being dirty, and therefore, well, we'd rather invest in tech because that's cool and innovative, and and it's easier to sell, and mining has this reputation. And is that a barrier that, I guess you guys are in this space already, so clearly you felt able to overcome it, but is that a barrier that you feel? And again, is there a role for governments and civil society in trying to improve that? I guess, I don't know if license to operate is the right phrase, but like a financial license to operate in those sectors.
I think connecting those sectors too with mining, right? Showing that without mining and metals and without industry, that you don't get that technology, you don't get the whatever it might be, the products that you're looking for. So being able to close that gap and be able to show that there's a connection that invest into the mining in order to get an investment into tech or AI or whatever it might be. So I think that's an important part of it.
Well, I think I actually agree with him. Yeah.
Yeah. Okay.
I was just going to say that's the interface between social license and, as Angela said, the industrial policy, and often there's a big gap between those two. And we think of not cobalt in Australia, but the coal industry, huge exports, but it doesn't have the social license. So companies and finance have withdrawn from that. They want to invest in critical minerals, but the social license is just a gap. Industrial policy, as Angela said, one of my big bugbears as you go around the world is energy. If energy is cheap, it enables industry to happen. If energy is expensive, everything is expensive. And in the great province of Ontario, they have the cheapest power in Canada. And that's on all their marketing information. Come to Canada, we've got cheap power, do your industry. And we in Australia go, wow, they're half the cost, a third of the cost. Why are we doing things in Australia when we can't get cheap power? And that plays out everywhere. But industrial policy, social license, energy is the start of all these things. And leaders don't get that at the moment.
And so I guess, Mitch, I'm kind of asking you to speak on behalf of the Canadian government here, which maybe I shouldn't do, but what's Ontario got right then if energy costs are so cheap? And you're Canadian, so you're obviously representative of the whole country of Canada.
PM, new Prime Minister.
Yeah.
No, I mean, again, Ontario and some of the other provinces are well endowed with mineral richness, but again, like Andrew said, there's energy is a big factor in that, and because of the plentiful hydro that we have, we're able to produce it at a much lower cost than a lot of other countries. We're trying to take advantage of that, and I think that's part of why Canada is really looking to secure downstream processing and manufacturing is because of that lower energy cost. It's funny though, because the province of British Columbia, for instance, we're actually, even though we produce a lot of cheap hydroelectricity, we actually are a net buyer back from the United States for energy. So it depends on where you are across Canada, and but Ontario is doing really well in that initiative, as is Quebec. Actually, Quebec is also a very strong, dominant energy provider.
Great.
Just in terms of energy, I was going to go to Navaid, because your project is renewable energy into that. Yep. We're also trying to do a copper project which has to be off-grid because the grid prices are here, but if you build your own energy and with batteries, you can get a much lower price. Is that what you're finding for your project?
Us, yes. I think we've located in Arizona, in Yuma County. It's the sunniest county in America. So solar power is extremely easy and relatively cheap, and there's a lot of other solar power developments in Arizona, so it's pretty well accepted. And yes, it's an upfront cost that's maybe higher than just connecting to the grid, but over the long run, the solar power will be extremely low cost for us, and also low cost for our local community and our local farmers. We are selling back some of our excess solar production to the local farmers at cost. So we have the buy-in from our local community. So it's like a win-win scenario for us to use solar power, and I think it's going to work out really well. Just sort of going back to something you said earlier, in the United States, the DOE, Department of Energy, and the Silicon Valley, they've been going for like moonshots, like really trying to hit grand slam home runs with closed loop recycling and, sort of stuff that's not there now could be there 10, 15 years from now. And you know what we're trying to do, and with this critical minerals processing, is actually copy China and you know get all that basic material processing back up and running in America, so that we have all these critical minerals onshore for future growth and expansion of AI, of other industries like data centers that are going to need all the critical materials that are will be produced in the United States.
Great. Do we have microphones? I think we do somewhere. So maybe we've got 10 minutes left of the session. So perhaps just before the end, before we close out, are there any questions from the room? Does anyone want to? I'm also, some people are hidden behind this pillar, so sorry if I miss you. But is there anyone who'd like to ask some questions of the panel? I think I've got a hand over there. I think it's Andrew.
Hi, Andrew Gully, formerly with USGS. From the government perspective, one of the issues is trying to plug individual gaps in the supply chain. And I know from an investment perspective, one of the main risks is price movement. So when you look to invest in a project, or the government looks to invest in a project, that price is one of the main issues. And so in governments, they've been discussing setting up strategic stockpiles where they're taking offtake at specific prices. That's difficult for a variety of reasons. But I'm wondering if this might be an argument for vertical integration and having mining, processing, PCAM, trying to create vertical integration, to create projects that are large enough that large government investments would plug multiple holes in the supply chain, and where investors could have more exposure to the downstream supply chain, whose prices and demand may be easier to model and more constant. So questions about vertical integration.
Anyone fancy taking that one?
I'll give a couple of intro comments, and I'm sure the other panelists. I think one of the issues of vertical integration in the countries that we're representing today, there's too many steps.
Yeah.
We just don't have the people, the skills to do all those steps today. And exactly what Navaid said, exactly what we're trying to do, just one little step and build that out. And if that works, then we can think about the other ones. You can't do 10 things at once. You can only do one thing, in my view. And that's a huge challenge for vertical integration. I think I just want to flip your question a little bit. One of the issues with investment community engaging is that they want to see a return, let's just make up a number, 10%, 20%, but they want to see that at each stage. Vertical integration within one company removes that at every stage, and it might be 20% across the whole thing. So vertical integration presents technical challenges to do it, but it also decreases the margins because you're taking profit out of each one and spreading that. And that's kind of the dichotomy of investment in each place individually with profits, and so you've got to hand that on, versus one vertically integrated thing. You just take the cream off the top.
10 steps to go wrong.
Yeah, that's right. It's many, many problems. Yeah.
Great. Any other questions? I can see two, but I think gentleman at the front had your hand up first, so I'll come to you.
Yes, please allow me to speak in French because I need to express very well my thinking, and I will ask for everybody who doesn't understand French to put there.
I don't think we've got the translation, but we have, I don't know, Marina, could I ask you if you would be able to...
Well done, Marina.
You will translate after. Thank you, Marina. Je voudrais juste intervenir par rapport à ce que j'ai entendu par rapport aux politiques qui devraient permettre aux investissements de pouvoir se faire dans une région ou dans un pays pour le long terme, ce qui est tout à fait normal. Mais il faudrait que l'industrie minière comprenne l'attitude de la République démocratique du Congo. Mon nom est André Wameso et je suis I'm the Deputy Chief of Staff of the President for Economics and Finance. Les gens devraient comprendre dans quelle vision et dans quelle perspective le Congo d'aujourd'hui se trouve. Nous avons compris une chose, c'est qu'à part peut-être la première révolution industrielle grâce à l'invention de la machine à vapeur de James Watt, mais toutes les autres révolutions industrielles qui se sont passées dans le monde ne se sont faites sans le Congo. Aucune. L'industrie automobile a eu besoin des pneus dont les VA venaient du Congo. L'industrie du chemin de fer, avec le chemin de fer électrique, c'était déjà le cuivre du Congo. L'industrie du nucléaire, c'était l'uranium du Congo. Et à chaque fois, le peuple congolais a été oublié. Le Congo est considéré comme étant une terre où on vient puiser les matières premières pour construire d'autres économies. Et la dernière en date, la plus meurtrière pour la République démocratique du Congo, c'est l'industrie du numérique, qui a vu depuis 1996 notre pays agressé par des voisins pour avoir accès au coltan, à l'étain, au triti, si vous voulez, en faisant des millions de morts au Congo et en laissant le pays dans la pauvreté la plus absolue. Maintenant, nous avons compris qu'il y a une nouvelle révolution qui arrive, vous en avez parlé, c'est la transition énergétique, la révolution verte. Encore une fois, les matières premières qui vont servir à cette révolution industrielle sont au Congo. On parle beaucoup du cobalt, mais il y a aussi du lithium. Vous venez d'Australie, donc vous savez qu'il y a AVZ, il y a Rio Tinto qui est aussi intéressé, avec Cobalt et tout ça. C'est encore au Congo. Et donc, nous sommes en train de réfléchir comment mettre en place les bonnes politiques pour que non seulement l'industrie minière puisse se développer et évidemment rémunérer le capital qu'il y a derrière chaque industrie, mais aussi profiter cette fois-ci au peuple congolais. Et c'est le sens de l'export ban qui vient d'avoir, mais ça entre dans le cadre d'une stratégie beaucoup plus large que ça. L'export ban vient d'un constat simple. Une mine a une durée de vie. Et nous avons compris qu'il y a un système d'exploitation du cobalt qui est supérieur à la demande, et donc le gap qui reste là, il est stocké quelque part. Il est stocké quelque part. Mais la mine va finir, le cobalt va s'épuiser. Mais la personne qui stocke, le pays qui stocke, va devenir à terme le propriétaire du cobalt congolais. Ça ne sera plus le cobalt congolais, mais ça sera le cobalt de la personne qui l'a exploité et l'a stocké. Encore une fois, le cobalt qui avait des prix à 80 000, qui sont maintenant à 20 000, vous savez ce que l'État congolais a perdu en termes de taxes. Et au bout du compte, la révolution industrielle verte va se faire avec les matières premières du Congo et la population congolaise ne va pas en profiter. Et c'est pour cela que nous sommes en train de réfléchir comment rééquilibrer les choses, faire comprendre au marché que maintenant, la République démocratique du Congo veut avoir sa place pour non seulement la population congolaise, mais aussi pour développer l'industrie locale congolaise, pour avoir un know-how congolais, pour entrer dans la chaîne des valeurs de la production de ces matières premières. Je voulais juste intervenir par rapport à ça pour que vous puissiez comprendre que ce n'est pas fait contre l'industrie, mais c'est fait pour que cette fois-ci, ce qui se passe dans le monde ne se fasse pas sans le peuple congolais, sans faire bénéficier de ce boom économique à la population congolaise. Merci. J'espère que je n'ai pas été très long, mais c'était important que je puisse parler de ça. Merci.
We have Mr. Omessa here from the presidential advisor, and he was really talking about the policy mechanisms and explained the DRC export ban. So he was saying that policy cannot happen without, the investments cannot happen without policies, and the world should understand that the DRC position, and it's really important to understand in which situation DRC finds itself now. And he was referring to the first industrial revolution that probably have happened without the DRC, but the other ones, or everything that followed, would not have happened without the DRC. And he was referring to the EV market now that uses copper, but it's not just cobalt that comes out from the DRC, it's also nuclear. And each time the people of the Congo were forgotten, and the DRC materials were used without the country really being involved in that. And we were having the digital industry revolution now, and the country was currently assaulted by its neighbors, and this situation leaves the country and its people in poverty. So there's new revolution that's happening, and this green revolution and the energy transition, and for the time being it's happening without the without the DRC, but the DRC is very much... Yes.
Because recently we have seen that with the digital revolution, every key raw materials come from DRC, but DRC faced since 30 years a terrible war for those raw materials, killing millions of people. Women are raped, and without any emotion of the entire world, because they know that we need our smartphone, we need our iPad, and we are close our eyes, and we say enough is enough. We are now with a new, I can say, industrial revolution, and we need to be part of it, and we need this revolution because we have raw materials that need for this revolution. We need those raw materials to be also for the benefit of our population. I think you can continue.
And so the DRC is currently thinking how to put good policies in place to benefit the Congolese people. And Mr. Omessa has also explained the purpose and the rationale of the export ban a bit, which at some point the exploitation system should be in place, and currently that there's a block and there's a gap in the supply chain system, and cobalt is used in the country, and it used to cost a lot, and the state, and because the prices fell, the state lost a lot of revenue in taxes. And so the green energy transition should involve the people of the Congo, and they're now thinking of how to balance things and make the market understand that the DRC has its place in the value chain, and it wants to build a place for itself in the value chain. So the ban was not against the industry, but I guess the bottom line was that what happens in the world can't happen without the DRC, and that has to be understood.
Thank you.
Thank you.
And I think that's actually a really good point to end on, because we often talk about this being a second industrial revolution, the green industrial revolution. And I think you're right. The first industrial revolution, we talked about the railroads and the products and the other things. And when it comes to the second industrial revolution, the green revolution, we need to, we're talking a lot about the vertical integration and the supply chains. And of course, the DRC from a cobalt perspective is going to be an important part of that. So maybe just to conclude, and thank you for remarks and on that, I guess that's also a really important point. The DRC is also an investment story, right? And it links into everything that we've talked about. How do you get money into projects? And that includes projects in the DRC. So maybe I'll maybe go through each of the panelists just to sort of wrap up, and we can end on that point, which is, so today, I think just to sum up as well, we've talked about de-risking, we've talked about stability of policy, we've talked about the cost of energy, and we've talked about learning to walk before you run, and getting that flywheel spinning of investment. And so with the question from the presidency of the DRC in mind as we conclude, what can industry do to get projects like those in the DRC up and running, and what is currently lacking that we could change? And maybe what I'll do is I'll start with Mitch and then go to Angela, because clearly this is a sort of finance thing first, and then I'll go to Andrew and then Navaid to finish off.
Yeah, I think I mean, there's a lot to take in there and to address, and probably another panel to speak to that. But again, I think it really comes down to stability and having that the levels of risk decreased through that stability. You know, there's so much volatility within the markets, whether not just on pricing and geopolitical risk and capital risk, but you need to have that stable situation to have proper investment in the sector.
Yeah, I cannot agree more with you. It's really about the policy coherence. Actually, if you look at the African country, even including DRC, the past decades, we're actually seeing policy stability increase. That's actually attract a wave of investment in copper project. Because I'm covering copper as well. So actually seeing thriving like copper supply, also cobalt supply in the country. So as long as like the investor, the industry, actually we can observe the stability of policy regime still there, then I think it's just a matter of time for funds, for investors going back to the country.
It's a massive topic, but I'll give you 30 seconds on this. My theory is the theory of trade. I make something that you would like, you make something that I would like, therefore we trade. And I think that's my personal, through Cobalt Blue, engagement with the DRC. The DRC at the moment makes cobalt hydroxide. I need that. I need to trade with them. Hopefully, with long engagement, they're able to use the return on that to change their economy and transform their country. But from a practical level, that's what we can do, is to trade with them. And over time, that'll grow, and then investment will come in, and maybe we'll do projects there. But you've got to start with the trade. That's where it begins. And for us, that introduces a challenge within Australia, which is what I'll broadly call the social license of, should Australian projects be dealing with the DRC? We believe yes, but that's where there's that, how do you bring the rest of the community along with that? And we have to promote it.
Yes, I completely agree with the Honourable Minister. And I would say the US government has recently enacted some programs under Exim Bank. It's called Supply Chain Resiliency Initiative, which can finance and help supply countries that do have the natural resources and the mineral wealth to invest US dollars into those countries to expand and their factories and move up the value chain, I think, into higher value add products. Employ more local labor, train more of the local workforce, build out more infrastructure. We've seen this happen in East Africa. I've done a lot of business in Kenya, for example, for the last 20 years, and Kenya has really dramatically improved since 2000 to 2025. Like massive changes in the country in terms of development, in banking, institutions. Rule of law, transparency. So we feel Congo is easily able to go down that path and surpass Kenya perhaps. But it will take time, and it will take openness and investment from from other countries, and transparency, and just sort of easing some of the bureaucracy and some of the hurdles for outsiders to help. But there are programs, and the U.S. has a couple, and we're actively working and seeking to work with people in the Congo to develop their natural resources and their economy for their benefit.
Great, and I think that's a really uplifting note to end on, because I think at the end of all of this, we talk about financing, we talk about Cobalt, we talk about projects. At the end of the day, there's a phrase which is a rising tide lifts all the boats, and I think that's fundamentally what we're talking about here. It's how do you get that tide rising and make sure it lifts all the boats at the same time. So with that, I just want to really thank my panel. I thought that was a really interesting conversation, and I'm conscious I'm in between everyone and the break, so I'll sort of wrap back up, and I'll hand over to Sasha.
Mike, thank you. Thank you very much. Thank you.